Welcome back to the Next Level Show. We have a completely different style episode today, which I've been excited to kind of get going. I have one of my really good long-term friends, Santiago Vanegas. We went to high school together. We go way back, I think, since English class in 10th grade, man. So
Yep.
super happy to have you on. But it's been interesting because the conversation we've been having lately, I feel that this is something we actually just were just talking that you kind of wanted to do this on your platform, and I think it'll be a perfect opportunity just to kind of discuss this. I think it's a hot topic. A lot of people that I've been actually conversing with out since I started kind of getting into it, a lot of people know about it. They are excited about it, but there's still a lot of misconception around it. Like, people don't fully understand. And I think this will be a great episode for anyone that's interested in talking and learning about crypto. So, Santi, how's it going, bro? Welcome to the Next Level Show.
Thank you, man. Thank you. I'm excited, bro. Thanks for having me here. And yeah, man, I got involved in crypto back in 2017.
Mhm.
So, the whole thing with everybody wanting to learn about it right now, obviously because of the price, there's still a lot of things that everybody should know before even attempting to get in, right? Because it is very volatile. A lot of people do get hurt with it, especially with these other little cryptos that come out. So, it's very important for anybody who wants to get in to first know everything that there is behind it, right?
And I think that I was super, I was on edge. I know you, I kind of hit myself on the back of the head when I think about it, because I know we talked about it way back, 2017, even 2016. I think you started kind of touching the subject,
Right.
even just with overall, just understanding money and everything. And we touched the subject, but it's not something that we're taught. Even nowadays, a lot of people grow, older, and they still don't understand what is money, kind of how it works, what's going on in the world. And that way you can actually make a very educated, educated choice based on your personal needs and what you want to get out of life in general. So, I mean, understanding these things, I think, really equipped you to kind of handle what life's going to be throwing at you. So, I wanted just to kind of get into it, man, because I know we're going to cover a lot of different topics. I think people can, first and foremost, you can watch this on a video platform on the YouTube. For people that don't know, we do have a YouTube channel. You can go and subscribe. You can see us having the conversation. If you prefer audio, we're on all the different audio platforms. Go ahead and share it with someone. And also, I would recommend checking this thing back. We have the show notes going to be ready for you guys as well. So you guys can kind of go highlight exactly where we cover each question, each topic. So it's going to be a good one. Let's get into it, though. So, Santi, start us off. I know this is going to be a critical one. Is just, what is money? Obviously, we know that it's for some people, it's paper. You kind of just go buy things with it. You go buy nice, shiny objects. You buy food. It's kind of like something that people are all chasing. But what is money exactly? How does it work?
Yeah, man, that's one of the most important things that people need to understand when trying to learn about crypto and how this all like came about, right? Why it got started. So, it's important to realize that at the end of the day, money is simply a belief system, right? So if you go back, hundreds of years before we even had like legitimate governments, whatever, like people would trade um like a cow for chicken, eggs for whatever, right?
Mhm.
So they would just barter, like, okay, this has value, I need that, so you give me this, right? So people would even trade. Shells was a form of money at one point, but what would happen with that, right? Shells, it became kind of not fair, right? People that were closer to the ocean, they had more access to shells. People that were far from the ocean didn't. So that wasn't a very fair system, right? So there have always been changes when it came to what is money, how is money perceived, right? What gives money value, right? So that's when precious metals came into the picture, right? Silver, gold, bronze, all these things, and they were given value because they were scarce, right? They were in a way divisible, and it was able to be carried around, right? But the most important part was the fact that it was scarce, right? That's one of the most key points when it comes to the precious metals, right? So let's skip forward now, and then uh, once people were actually trading this gold, right? Let's say they made gold coins, so they were able to then say, "I'll give you this gold coin for your goods and services." right? So that was going on for a while, but then obviously gold is hard to move around, right? If you needed to carry a large amount of gold, it's very difficult to just carry, let's say $50,000 worth of gold, or you would have to carry a lot of weight. You have to be bodybuilder type, carry all that. So once you then face that problem, then you started creating what are called notes. So it's like this second layer on top of that gold. And these notes, we could define them as a dollar bill, right? So the United States used to have in their banks, they would have gold reserves, and for every dollar, there was gold that was backing it, right? So whenever you went to the bank, you said, I want to deposit this gold or whatever. Then the amount of notes that were given to you that were representing that gold, it was backed by it, right? The amount of gold that was in the bank, it was represented by the pieces of paper that they would give you. So it had that type of like, all right, the bank for sure has this amount that is going to be backing this piece of paper that I'm grabbing. Then in 1971, Richard Nixon decided to basically take the United States off of that gold standard, right? And what did that mean? It meant now that the government could just print money at will, and they did not need to have the equivalent amount of gold in the banks, right? So now if the government wanted to print X amount of money, they didn't need to have that gold in there, right? So this was actually supposed to be a temporary experiment that the United States did, right? And it ended up being something that has now gone on since then. They never looked back. So with that, with the printing of money nonstop, since that gold standard was removed, is when now we have what's called inflation, where inflation over time, the point of inflation is to devalue our current money, right? And the reason for that, it actually has a good purpose, right? So let's say if you have a money or piece of paper or whatever, and every day that passes, it's gaining value, you're not going to want to go out and spend it, because why would you if tomorrow it costs more? So then they print more money. That way it loses money every year. I mean, it loses value every year. So you're incentivized to go out into the economy and spend that dollar bill, right? That way the economy starts circulating. Jonathan, you have a service that I want, so I go ahead and give you my dollar bill. Then you like somebody else's service, you pass on that dollar bill to that other person, and that's how the money circulates, right? That's how those dollar bills start circulating. So inflation in a way is good to keep that monetary supply going throughout the economy, and keeps everything healthy. Now the problem is when these other things start arising that were hard to kind of predict, right? So let's say one thing that actually happens today in the banks, in the banking system, is this thing called fractional reserve banking, right? And what that means is, let's say if you deposit $100 in the bank is not required to hold that $100 of yours, right? So they are only required to hold, for the most part, 10%. If they have over $124 million in asset that they are managing or that they're invested in, they only need 10% of that money that you have deposited in there. And the rest, 90% of your money, they can loan it out to people, right? So that's how banks make money for the most part. They loan money out to people. They gain interest. So whatever interest it could be, 3%, 4%, 5%, right? And then from that interest, they pay you, the person that deposit the money, and you trust them. They pay you a small part of that interest. So for a savings account, it could be like 0.01%, which is nothing in comparison to what they're making, right? But that's the whole, the biggest part of the banking system when it comes to their, like the way they make their money. Now, the issue with this fractional reserve banking, right? If everybody at once goes to a bank and tries to withdraw the money that they deposited, the bank is going to say, I'm sorry, we don't have that money. It has been loaned out, right? We don't have it. And we don't have gold to back up that anymore because we're no longer in the gold standard. So what happens there, right? Like people lose their trust in the banks. Like how did I have all my money in there? So in some way, when you deposit your money in a bank, it's no longer yours. So it's very important for people to understand that the way that money gets sent around the economy, it's, in my personal opinion, it's sort of scammy. It's like a scam when they are literally using your own money for them to make more money. But then if there is a big crisis, which has happened in many other countries, where a lot of people go into the bank at once, they say, I'm sorry, we can't do anything about it. And that's that. You just have to accept it, right? In Zimbabwe, it's happened, in Argentina, Venezuela, right? All these countries where banks and the governments have not used their monetary policies correctly, it has led to these big downfalls to the currency, right? So when it comes then to trusting, that's the biggest part with crypto, right? So the trusting aspect, let's say in 2008, right, with the whole mortgage crisis that happened, that was because banks were loaning out incredible amounts of money to people that weren't making enough money to pay these loans back, right? So this is what we're talking about when it comes to the irresponsibility of bankers, right? So as they're loaning these money out, they're like, okay, we're making all this money, we're making interest. Let's just keep doing it nonstop until something goes wrong. Then everybody goes to a bank, tries to take their money out. They don't have it, or people just can't pay the loan back, right? Everybody that was getting all these loans for 5 houses at once, they're not able to pay this money back. So the banks are losing money, and then they stop loaning more money to people. So it just turns into like this vicious cycle of just things going wrong. But it all started because the banks just irresponsibly loaning money out to people nonstop, right? So then what happened? The stock market started crashing. And in order for the stock market to stop crashing, because it was just spiraling downward, banks were going to go bankrupt. Lehman Brothers went bankrupt. Many other banks were going to go down with it, but the government had to step in and print money, right? So when it comes to the government printing money, it's so that they could inject it in the system, so that then the economy could just come back up, which in a way it helps, the majority of us, because if not our parents, everybody else would have suffered. The majority of citizens would suffer. But that incentivizes these bad actors or bad things that banks and bank institutions do. It incentivizes them to, okay, like, I know I'm kind of too big to fail, so let me continue to do these same things. Although after 2008, there were like certain bills and laws that were passed so that this wouldn't happen again. There are still many like fraudulent acts that these big institutions do, like manipulating silver and a bunch of other things. But anyway, so when that occurred in 2009, we get the creation of Bitcoin, right? And this Bitcoin was created on top of this new technology called the blockchain. So Bitcoin was or is trying to be basically a new monetary policy. So when it comes to monetary policy, what I mean is basically the government right now, the monetary policy of the government is keeping inflation at an average of 2% per year, and raising or lowering interest rates, all that stuff together is basically a monetary policy. So when it came to Bitcoin being created, right, we don't know who created it. The person's name, it's a pseudonym, it's Satoshi Nakamoto. They created this technology called blockchain. The first application on top of it was Bitcoin. And it was basically to solve this trust issue that people were facing when it came to the financial system, right? People were kind of waking up and seeing like, okay, all these problems that are happening in banks around the world, how are people just going to continue to let these bankers or whatever take advantage, right? Because there's not much that a person can do. Like you either, you work, you collect your money, you put it in the bank, and that's it, right? So you're trusting that the bank has the best intentions for you, but a lot of them, I'm sure they do, but then, they also, unfortunately, everybody's human, and there is that greed emotion, right? Most of humans are controlled by greed and fear. And the fact that banks have so much power with all the money, as much as good intentions as they have, they still have investors that they need to take care of. So if they need to do something shady to keep their stock up, they'll do it, even though it'll damage other people, right? This actually happened with Wells Fargo, where they started creating multiple thousands of fake accounts
No
just
shit.
to make it seem like every quarter they were getting more and more clients, even though they
Mm,
were fake. There were no real clients, and their stock would just keep going up. So once that happened, they got fined. And let's say that their fine was $1 billion, but they make 150 billion a year. So that fine is just a slap in the wrist. And then they just continue doing similar stuff, right? So the point is that trust is incredibly important when it comes to the financial system in general, right? So then we get into crypto and why it was created, right? So this Bitcoin thing is basically a paradigm shift where this person who created it was trying to set basically new rules when it comes to the monetary policy.
mm-hmm.
Like I mentioned, with our current monetary policy, we are governed by inflation, right? Over time, more and more money gets printed. With Bitcoin, it's the opposite, right? So over time, every 4 years, there's less Bitcoin that is created. It's called the Bitcoin halving, and which means that the amount of Bitcoin that is found or mined, which we'll get into that a little bit later,
Mm-hmm.
gets cut in half, right? So that's called deflation as opposed to inflation. So over time, that makes it so that the Bitcoin itself gets more valuable, right? It makes it more scarce, which is what we talked about earlier when it comes to gold. That's one of the things that we look for when it comes to something being a money that's actually strong, right?
Yeah.
Good money.
Santi, I wanted to
Yeah.
pause you right there just to make a point, just for the listeners that are, listening to this, to understand like how crazy it's been in the last like 70 years. This is even before, 1970s. The cost of living, I was watching, and it was interesting. I saw this right before we did this podcast. A new house back then was only $8,450. New car, roughly $1,500. Minimum wage was 75 cents. Even to like gallon of gas, and then we know a gas is just blowing up. It was just to imagine that gas was about 18 cents a gallon.
Oh my
um
God.
so literally the money that we made now, it's worth like so much less compared. Now everything's just blown up, and like that's just for people to kind of just put an idea. Even a McDonald's hamburger, 15 cents, a coffee, 5 cents. I mean, you're talking little fractions of what we pay now. We pay easily for a burger at McDonald's. What is, I don't know, it's like $5 now for a normal sandwich. That used to cost nothing. So just so people can keep in mind what's going on right now. Even just, we'll kind of get into it as well, what's been even happening in the last year with COVID, how everything's been affected, and this will kind of start tying in for our listeners. But keep going with where you were at.
Yeah, man. No, exactly. You're exactly right. And people would say to that, like, oh yeah, but back then people would make less money. And it's true, like their wages were lower. But the point is that most wages have not gone up at the same rate that inflation has gone up, right? So since 1913, I believe, is the year when this whole like the Federal Reserve thing was created and the printing of money and everything started, right? And since then, the value of the dollar has gone down by 95%. I think a little bit more than 95%.
Wow.
So the reason for that, it's not that like when we say, oh, that the price of a gallon of gas it used to be whatever, how many cents, and now it's $3, $4. It's not that gas has gotten like more valuable or that it costs more to just get the gas. It's that the value of the dollar has gone down. So you need more pieces of that paper to buy the same amount, right? So if the four of us, right, if we're create our own country and we only have 4 pieces of paper, each one of those papers is valued at $1. And then all of a sudden, let's say I'm the ruler of this new country and I decide to put in 4 more new pieces of paper, but I give them to myself, not to you guys. Now there's 8 pieces of paper in the market between all 4, but I have most of them. But now since there are 8, all of the dollars now have been cut by half in value. So what you guys used to buy with that 1 piece of paper, now you need 2 of them to buy it. It's not that everything else got more expensive. It's that your dollars are now worth less. So that's important for people to understand too. It's not so much that, yeah, like, oh, now a banana at grocery stores costing, 50 cents more than last year, the banana didn't get
Better.
any better. Yeah, it's just literally your dollars
The
are
banana
losing value.
doesn't have more potassium as a result. It's just the same banana.
Right, exactly. So a good economy at the end of the day is if the amount of money being put into the system is keeping up with basically the productivity of that economy, right? As the economy is producing things, innovating, actually making the entire whole better, then things will go up in value naturally as things get better. But the problem is when the supply of money coming in is not meeting that the pace of productivity. If productivity is stable and there's a bunch of money coming in, then your money is just losing value, which makes everything go up. But not because everything's getting more valuable. It's simply your money is actually losing purchasing power. So that's where a lot of people get hurt, right? The top 50% of Americans in the country that are invested in the stock market and real estate and gold and in crypto, right? They are doing good because those assets continue to go up. The bottom 50% that don't know how to invest, that they have no idea what a stock is, they just, they've never quite learned any of this. Mm-hmm. They're the ones that are getting hurt because they could have $100,000 in their bank account, but if it's just sitting there doing nothing, every year it's going to lose purchasing power. So as of now, we're a little over 5% in inflation, which is pretty high. We normally wanted 2% inflation per year, and a 2% rate of inflation. So let's say right now that we're at around 5%. Anybody who has, let's say, $100 in their bank account, by the end of the year, that will have a purchasing power of $95, right? And it's not going to say in their bank account, oh, you have 95. It's just that now those $100 is going to be able to buy $95 worth instead of what they could buy last year, right? So yeah, that's why it's so important for people to understand that whole inflation aspect.
This was a big moment for me because I know we come from, our parents, immigrated to the United States for the most part. And their mindset of money is completely different than obviously how we're viewing it now. They didn't teach us anything, I guess, with bad intentions. They just don't know. They don't know at that time. And the motto for a lot of us was work hard, save your money, and try to live under your means as best as you can, which is sound advice. I mean, for the most part, you'll do okay, depending also what you do for work. But we know now that just like you just said, having that money just sitting there, we talked about this years ago, and I didn't fully grasp the concept. And this is why I'm like super excited for people to, if this is new for them, I want them to save themselves some time. Is that I was stacking up money, putting it away, thinking that was the right thing to do, which sure, at that time in my life, maybe, but looking back now, how much life has changed in the last couple of years, how much that money could have been working for me versus me having to make more of that paper just to kind of keep up with, life.
Exactly, man. Yeah. And of course, people still need to have, money in the bank for their bills and emergency funds, everything. Like, we're not telling anybody to go out and invest everything, because regardless, investing does carry its risk, right? Even in real estate, which people consider to be safe, look what happened in 2008, right? A lot of people lost their homes, lost their investments. So it's still something to always, consider when it comes to the risks that come along with it. But it's definitely important, especially if you're young, to be invested, right? The younger you are, the more risk you can take, because if something does go south, then you have plenty of time to, make up for it. Now, if you're about to retire and you have your money in a 401k or something, then I don't recommend you just jumping in and going crazy with the risk, right? That's very different. So
don't buy DOGE or Shiba coins, just risking it all.
Exactly, man. Yeah. So everybody has their own their risk tolerance. I didn't follow.
Of course. And we're going to definitely get in some takeaways for our listeners for some investing things, stuff that, you advised me. And I think that's super helpful. But I kind of wanted to get into, we kind of already kind of brushed up on where crypto started. Well, Bitcoin and the basically the number one coin of crypto. Is that correct, Santi? Bitcoin is the number one coin right now. It's the main coin where everything started. Kind of where that, we talked about like the person, to use an alias, smart person, to create this. Now, what what is it, and how why is it so powerful? We kind of talked about a little bit about inflation, deflation. I kind of paused you there, but kind of like to get back on there, I wanted the listeners to understand this is where the power of that currency comes in.
And then specifically, I've always wondered this. I've looked this up many times and I've never fully grasped it. What the fuck is a blockchain?
Perfect.
We're gonna get into it.
There you go. So we'll start from there. So like I mentioned, this Satoshi Nakamoto person invented this new technology, right, called the blockchain. So the way that we could think of a blockchain is, let's go back to the bank scenarios, right? When we deposit money in a bank, the bank has what's called the ledger. And a ledger is basically a book that just keeps notes of all the transactions that are coming into the bank, right? So Jonathan deposited $10, Santiago deposited 20, whatever. And it's just keeping track of all of these different transactions. These ledgers have existed forever. Before the internet, before we had digital stuff, like for our parents, they would go to the bank and the ledger would be literally a book, and the banker would write down the quantity that they had in the bank account. And that's it, right? They would come back and they would pull out the book and say, okay, you want this amount? Then they would just do everything by hand. Now in the banks, they basically have that same thing, but now it's digital. And blockchain is basically that same exact thing, but it's the genius behind it is the fact that it's decentralized, right? So a bank has one centralized source where that ledger exists, right? And their computers, wherever they keep that. But it's only in one specific area of their business. Now, the blockchain, when it was created, every single computer that connected to it, so at first, let's say it was one computer by Satoshi Nakamoto, he launched that technology, the blockchain. That computer was the first node, we call it a node, to start securing that Bitcoin network. Right? So as that node is active, that computer is just running, trying to solve this problem. And when it solves this problem, it gets rewarded by Bitcoin. Now, when it was first created, every 10 minutes is when this problem was solved. And after those 10 minutes, the computer that solved that problem would get rewarded 50 Bitcoin. 4 years after that, it was 2012, the Bitcoin reward gets cut by half. So now instead of every 10 minutes, computers getting rewarded 50 Bitcoin, they get rewarded 25 Bitcoin, right? So the more and more computers start connecting to this Bitcoin network, right, the more and more secure the network becomes, right? Because the fact that each computer is trying to solve these problems or whatever, they're actually verifying all of the transactions that are coming through, right? So when you go to the bank, the teller is the one who is verifying the transaction, making sure you're not fraudulent or whatever. That's the job of the bank, to make sure that all the transactions are coming through are legit. So these computers that are connected to the Bitcoin network is doing that same job without the need of a bank. So they are verifying that to make sure that all these transactions are legit. And every single computer that is connected to this network has a copy of all of the previous blocks. So as I mentioned, every 10 minutes, a new block gets created, right? Every time that the reward gets given out to a computer, that block gets saved and gets pushed back, attached to all of the previous blocks. So all the 10 minutes prior, since Bitcoin's existence, it exists in the blockchain right now. And you could see every single transaction that has ever occurred on that blockchain. So it's extremely transparent, right? You can't go to a bank, to their website, anywhere and see, I want to see what this person spent on this year. On Bitcoin, with Bitcoin, you could do that. You could go, I forget the website, but it's public for the entire world. And you could see every single transaction that has ever occurred, right? So going back now, every 10 minutes that the computers solve this problem, that block gets created and it gets attached to the previous block. That's why, hence the name blockchain, right? So did I answer your question? I forgot what your question was. Oh yeah. So you said what is
a blockchain? Mm-hmm.
Exactly. Yeah. So that's exactly what, hence the name blockchain, right? So let me see what. Okay, so then the fact, like I said, the fact that every computer that's connected to it, they have an incentive, right? So that's the person who created this had to know about finance, had to know about macroeconomics, had to know about human psychology, about like cryptography. It was crazy the amount of stuff he had to know, because he had to find a way to incentivize people to keep this network secure. But why would a person want to secure a network if they didn't get anything back? So, okay, I'll reward them with this random Bitcoin. At first, it was worth nothing, right? The first time that one node was created, this person set it live, it was worth like 0.0008 cents, like less than 1 penny. And slowly it just started, picking up steam. Like people started connecting to it. At first, it was like the really nerdy people online who just wanted to use it for things online that really had no value. And over time, it just started picking up steam, and people are like, okay, let me connect to it and let me just get this digital currency, right? And the more people connected to it organically, nobody was marketing it, nobody was doing anything. It became stronger and stronger. Now it's at a point where it's literally the strongest and most secure computer network in the world. Like Google doesn't have this security, Facebook doesn't have the security. It's almost impossible, or I would say impossible right now, to hack the Bitcoin network. If you want to hack it, you would have to hack every single computer that is connected to the network all at once, or at least 51%. That way you could get control of it. And even if you did do that, if you managed to do that, which would take more money than the money you would get out of it, then the Bitcoin network would do what's called a fork, which would basically leave all the previous blocks behind, keep a copy of them, and go in a different direction. So the hacker would just stay with like a valueless blockchain, and the entire network would just move somewhere else. So the whole idea behind it when it comes to the blockchain, that's why it's so powerful. And when people understand really how it works, it's crazy. Like that banks are, I'm sure they are a little fearful when it comes to this, because it is literally a way that you can make transactions without the need of banks. So, just like Uber disrupted taxis, Airbnb disrupted hotels, the blockchain or Bitcoin specifically, Netflix disrupted, theaters and stuff like that, Blockbuster. Bitcoin can be a big disruptor to the financial system and banks.
Yeah, respect Blockbuster.
RIP, man. I remember those weekends. Go ahead, Mike.
So, I was going to say, what's the, what's kind of keeping, in your opinion, what's kind of keeping cryptocurrency or Bitcoin more specifically, if we're just going to strictly talk about that, from becoming more mainstream? Because right now it kind of seems to just be something to invest in, right? Where we're just like, let me just put like $100 in every once in a while. And then if I make a good decision, I'll check back in a couple months and it'll be worth a little bit more money. So it's kind of like that's tends to be what most people are using it for right now, right? It's just investing. They're trying to make like a short-term gain of some kind. So like, what's the difference, or maybe what would be the difference that would make this like a more viable currency instead of just an investment? Does that question make sense?
Yeah, 100%. And this is a question that comes up, tons and tons when it comes to people talking about it. And yeah, it's a great question, because as of now, so what I mentioned earlier, right? Like if we have a dollar bill that every day goes up in value, why would you want to spend it? It makes no sense. So same thing with Bitcoin right now. If you have it and you expect it to go so much higher, why would you want to spend it? And that's completely, fair. That's a fair question. And I think right now, Bitcoin is not in a point to be used as a currency. And to other people's points as well, from all the other current cryptocurrencies that exist right now, there are other ones that are trying to compete. But the biggest thing with Bitcoin is that security, right? That secure network that we spoke about. So as of now, Bitcoin is seen more as a store of value, right? So for people that don't understand what store of value is, it's like when you think that your money is at risk of losing value due to inflation or the stock market going down. In the past, investors would rush into gold because gold was a form of for them to keep
currency.
Yeah, like not so much that, but like they knew that gold was going to keep its value, right? Because they know it's scarce, they know it's there, they know it's not going to go anywhere, right? So it's a form to just maintain the value of your currency, of your money. So Bitcoin has basically those same principles as gold, right? It's scarce, it's divisible. It's actually much more divisible than gold and much more portable than gold. So in a sense, it's better than gold. The thing that people can't wrap their heads around is the fact, like it's non-tangible. But like we mentioned earlier, when it comes to these new monetary systems or new technologies, a lot of it comes down to a belief system. That's really what any type of money is.
Yeah.
So kind of to answer your question though, like what keeps it from going mainstream? I don't think we're going to have Bitcoin become like a transaction money anytime soon. They are doing it. Like they bought houses with it already, cars, like you could buy coffee a lot of places. But again, if you think that the value of it is going to go up in a month, you're going to be pretty pissed if you bought Starbucks coffee one day and then you realize a year from now that same amount of Starbucks now is worth $1,000 that you like wasted, right? Like back in like 2011, somebody used like 10,000 Bitcoin to buy one pizza, and that it was worth like $30 back then. For the 10,000 Bitcoin, it was like $30. So now that person, imagine how they're feeling.
Yeah.
Oh, no.
That guy's got a funny story though.
Yeah, man. So
that's something you just got to laugh at. But yeah, I've seen like, like little stickers in windows of some stores that say like Bitcoin accepted or Ethereum accepted or whatever. So like it is happening, but I guess that makes so much sense that it's kind of what my head was thinking, but you put it in a way that I never would have thought to say it, where I'm like, I'd rather have it just sit there and accrue value until, like in my case, I had some money in a couple different cryptocurrencies and it built value over time. And then I saw a WRX in a car lot and I was like, that has more value to me than this stuff sitting in my account over here. So I made an exchange financially and turned it into currency and blah 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 and did the purchase. But I guess that's an interesting way of putting it, and it's not something that immediately came to mind when I thought of that as a question, but it sounds like an obvious answer now that you said it that way. Does that make sense?
Yeah, but no, man, like I said, a lot of people have that question. Even so, this past weekend, there's this guy who's been in Bitcoin for a long time called Anthony Pompliano. I follow him a lot. He's a big like spokesperson for Bitcoin basically, and he has a lot of followers on Twitter. And he like tweeted this thing out, I don't know, something about Bitcoin, and Mark Cuban hopped on board and kind of bashing it a little, and everybody who's in Bitcoin started kind of going off on Mark Cuban. So then they did this thing called Spaces. I don't even know that existed in Twitter, where it's like you could hop on and actually talk like we're doing now, but without video on Twitter. So Mark Cuban was talking about it, and he brought that same topic up about how Bitcoin, he sees it as the best store of value. Basically, he said like it's the best store of value anybody has created. You could put your money in there and see it grow over time. But when it comes to it being a money as of right now, to transact, it's not the best. So he says something like Dogecoin, for example, that could be used as money. And I could see that. And that's where I'm sure we were going to talk about later other cryptocurrencies. But a lot of people get hurt when they see all these little coins, for example, like Dogecoin. Dogecoin could be a great technology, right, for transacting value from one side of the world to another. But people look at it as an investment, and that's where they could get in trouble. They think that it's because it's 30 cents, 40 cents, however much it costs now for one Dogecoin. They think that it could go to like $100, and that's not going to happen, right? There's a lot of things behind what decides how much an asset is worth, like how much of it exists, right? So for Bitcoin, one thing that we didn't mention, there's only ever going to be 21 million Bitcoin created ever. That's just part of the code. And that can't be changed. No government can change it, not one person. For Dogecoin, there's, I think, trillions of the coins that are in circulation, right? So that's why the price of it is so low, right? So when you have a lot of something, the price is going to be lower as opposed to when there's scarcity that we talked about earlier. So something that has a lot of it can be used as transaction. And, you don't have to worry about the price going up the next day by a whole bunch.
Yeah, that was one of the things I learned very quickly because I saw these small numbers of value of like, oh, this one only costs like a tenth of a penny or whatever. And I'm like,
Hmm.
sweet, I'm gonna make it fucking big. I'm gonna buy a
Right.
fucking yacht. And I didn't realize there's basically an infinite supply of these things. And in order for it to become valuable to any degree, the market value of that coin, in order for it to reach like $100 or something like that, it would bypass like the global economy by a very
Exactly.
wide margin. And that's
Hmm.
just never, ever, ever going to happen unless something
Exactly.
catastrophic happens.
Exactly.
No, I'm glad.
Exactly.
I'm
And if
glad.
something
I'm glad.
catastrophic,
No, I'm
my
glad that
bad,
you
go ahead.
put that. No, just real quick. I wanted to make a point for people listening. So we are gonna mention some of these smaller coins. You just brought up Doge, and we can talk about some that are kind of relevant right now. But when it comes to, you're not using it to buy Starbucks or a pizza, right? You're using you're using with the mindset you should go into it with just Bitcoin itself. We can even talk about Ethereum, like these coins that are more stable. I know we can even cover something you that made a kind of ingrained in my brain is that when you're looking at these coins, you want to look at why Bitcoin has so much security, so much value. It's because of all these things it has kind of backing it. And look at it from that long-term game. Like this is by no means, I want the listeners to, if that you're not aware, is that this is not a get rich quick scheme. I mean, over time, it can turn into something very lucrative for you, but it's not just you're gonna get in. You don't get into these type of investments just to become a millionaire the next day. It doesn't work like that, and I think that's where people kind of are clashing because they see we're going to talk about like why it just even goes up and down so much, but people freak out about it. And just like we are a fitness podcast, we talk about this all the time, and I think this is why like I like it so much because when we're talking just weight loss, it doesn't happen overnight. You don't just become skinny, ripped, and lean like overnight just because you started eating one day of healthy foods. It's a string of all these events, and you're going to see these peaks and valleys, some more than others, but overall, the trend in weight loss is down. Overall, with investments, you kind of want to see the peaks and valleys, but going up over time. And this is kind of what you'll see when you get into any type of investment when stuff is going overall good in the long term.
Exactly, man. Yeah. No, and that's a great point because that's unfortunately, again, going back to psychology, like when I first started this whole, me getting really deep dive into this whole crypto thing, I first started learning about stocks, right? Like how the stock market works, how to invest, how to trade, what are options, like everything. And you quickly learn how the entire market revolves around psychology. The reason why a stock goes up, it's because more people are buying it at that particular moment than people that are selling it. When a stock goes down, there's many more people that are selling it as opposed to the people that are buying. What causes people to sell? It's usually fear, or they need to sell because they need the money for their kids, whatever.
Mhm.
So there's obviously many reasons, but the point is that people sell usually due to fear, and people buy due to greed. And in crypto, you can't you can't think of how much greed there is when you see these prices go up, and that's where a lot of people get hurt because they don't understand the fundamentals of how it works, right? So what I mentioned about understanding how the blockchain works, how powerful it is, how Bitcoin only has a very scarce amount of it. There is over 7 billion people in the world. So obviously not every single person is going to be able to have one Bitcoin because there's only 21 million. So the scarcity is a huge part of why the price goes up. But now why I mentioned the whole greed and fear thing is every 4 years, like I said, is when the Bitcoin supply that gets rewarded to the miners gets cut in half. And that's called a supply shock. Usually around 18 months after this happens, after this Bitcoin halving, is when we see these massive rallies, right? So in 2017, 2016 was when we had the Bitcoin halving, and 2017 is when we saw that parabolic rise from $1,000 all the way up to $20,000. I remember like in Thanksgiving of 2017, like it started going up. Everybody and their mother were talking about like, oh my God, I need to get in, need to get in. And it was already up to like 17,000, 18,000. So that's greed. That's everybody like, I want more, I want money, I want money, I want money. And that's when you hear everybody talking like that, you need to start getting scared. You need to start thinking, all right, this might be at a top, so it might sell off soon. Usually the big investors, the people who have been in the game for a while, they already are veterans with this. So they'll start selling when everybody wants to get in and they're selling large amounts, which then puts pressure downward. And that's when things start coming down. So the people that got in at the top that were super hyped and, oh my God, I'm going to get rich so fast, they have no idea how it works. They don't know why they got in. They just were told by a friend that they have to buy in order to get rich. And then when they see the price coming down, they get super scared. So they sell. So it adds on to even more selling pressure, more. And so it goes down even more and more and more. So it just becomes a domino effect, right? So again, it's very important to understand for any type of investment, not just crypto, why you're investing in it. That way, if it does go down, then you're calm and you're actually, no, I believe in this wholeheartedly. I'm actually going to buy more as it's coming down because now it's cheaper. I could get more of it, right, over time, as opposed to, I can't believe I invested this. Now I have less money. Like, what do I do? No, like if you're investing in something, it's because, you want to hold it for the long term. Sure, a lot of people trade and they make money, and I trade in the stock market, but I just trade companies and I don't really care about like their fundamentals. Like I'm just, doing it for very short periods of time, which is very risky as well. But for something like Bitcoin that I understand a lot in the blockchain, I'm in my opinion, I think it's gonna be around for a very long time, which is why I've been, accumulating over time and just, letting it do its thing, right? And these cycles are going to continue, right? So we had the previous Bitcoin halving last year, and that's why now, in my belief, we hit that supply shock. So we're going back up parabolic pretty soon, even though we went from 20,000 to 64,000. We just broke above that like yesterday or 2 days ago. So we might see much higher prices soon. And we're going to see this euphoria again soon where everybody's going to hop in. This time, it might be also institutions. Now, what's called an ETF in the stock market for Bitcoin got accepted. So this might cause the price to even go much higher because now bigger players are going to come on board with like not just thousands of dollars, but hundreds of millions of dollars are going to start pouring in. And again, because it's so scarce, it'll shoot the price very quickly, very fast, and very high. So people need to be wary that just because something is going up and it seems like it's not stopping, it doesn't mean it's not going to stop. So the same crash scenario can occur maybe next year, a year, or like a whole year from now. Maybe we could see another huge crash, but it's not going to come back down to $3,000 like it did in 2017. The next low could be maybe 50,000, 60,000, where we're at now, depending on how high we go, right? So
absolutely,
it's important to understand that.
I think that it's a very critical there. Something that really stands out is just taking your emotions out of it. Try to be as objective when you're looking at data, looking at numbers, looking at information that's coming in, and you're looking at stuff happening. Start learning, I guess, the patterns and trends of how your fundamentals come from actual, just like watching our stock market, I'm assuming, Santi, and then you kind of can translate some of these principles over to kind of also a little bit of the differences that happen with crypto, but understanding those things are important. This is no different, like I always reference, I my brain always goes fitness, but it's understanding that like you can't get emotional stepping on the scale and seeing your weight change. It's going to happen. It's just part of the process. But if you just stick to your guns, you believe in what you're doing, you're being consistent, you're a consistent investor, you're going to see a good long-term return. You just have to do your absolute best, take your feelings out of it, because it's very easy to freak out after a spike, or in this case with money, get excited because of a spike, but then you get freaked out when you see that drop a couple. Like I remember when I just started really recent, so this is why I wanted to have you on, because I'm super green and I'm learning, I'm kind of solidifying the stuff that we like talked about. But when I started seeing that thing drop after, I'm like, oh damn, like no kidding. But then everything's going good right now, but we're also expecting, okay, cool, this is nice. Maybe slow down with how much I'm putting in right now because of how much it's how expensive it's getting. But maybe when I see it go down, that's when I'm excited and I'm ready, versus I'm getting freaked out and I want to sell. I'm going to actually be able to be, okay, I'm going to put more into it because I bought into stuff that I feel comfortable with. And we'll kind of talk about that. But, it's understanding like you have to change your mindset going into this. And I'm not expecting to wake up one day and just be living on a yacht. It's like, this is future long term. We're still young, so if you, depending on where you're at, I know our demographics roughly around 30 years old. You still have a lot of time in the game. So I mean, this is a wonderful opportunity.
Yeah, man, exactly. And yeah, so like you mentioned about, a lot of the fundamentals being picked up from the stock market, it definitely helped. But what most people, when it comes to crypto, especially, again, I want to touch back up on the whole supply aspect. That's
Yeah.
a big part that I picked up from the stock market, right? Like, if we see two stocks that are similar, like let's say two banks, a Bank of America and Goldman Sachs or whatever, one stock could be worth $20, the other one could be worth $100. It doesn't necessarily mean that one stock is more valuable than the other. When I say that one is worth 20 and one is worth 100, I'm talking about the stock price.
Yeah.
But what's the amount of money that could be invested in both could be the same. This example I'm using is not accurate. And like if you look at the both of those stocks, they don't have the same amount of money invested, but I'm just using that example.
Yeah.
The price that you see in your phone when you're looking at one coin versus the other, just because one coin is cheaper, it doesn't mean that that's a good investment, right? So people need to keep that in mind. That's one of the most basic things when it comes to economics is supply and demand, right? I keep touching up on that. The more there is of something and the less demand there is, then it's going to make the price go down, right? Or even if there is a lot of something and a lot of demand, if there's too much of that supply, the price is going to be very hard for it to go up, right?
Mm-hmm.
So like Mike mentioned earlier, for one of those coins that are less than a penny, if it wants it to go to $10, $100, it's going to require more money that exists right now in the entire world. So people need to be very careful with that because, you see Bitcoin. A lot of people ask me, oh, is it worth it right now for me to invest in Bitcoin? And I tell them, look, right now there's 18 million, a little over 18 million of those coins in circulation for Bitcoin. And the market capitalization, meaning how much money has been invested in Bitcoin, right now is a little over $1 trillion. That's how much money has been placed into Bitcoin. And that money divided by the amount of coins in circulation is what gives it this current value of $65,000 where we're at. So if people think that Bitcoin is the next best store of value, which it seems like a lot of the smartest people around the world, even Mark Cuban saying it, all these really smart people are saying that this definitely is a very good store of value, and it could take the spot of gold. And right now, gold's market cap, the market capitalization is at around 9 trillion to 10 trillion or so. That's how much money has been invested into the gold market around the world. So if Bitcoin reaches this gold market cap of around 10 trillion, right, it would be 10 times its current price. So right now we're at 1 trillion for Bitcoin, give or take, of how much money has been invested in it. So if it goes to 10 trillion, that means that it would 10 times its price from where it's at right now. So if it's at 60,000, for example, let's say we could see it go to 600,000, right? So when people ask me, is it worth it? But then they'll say, oh, but this other coin is 1 cent. Well, this other coin that's 1 cent could already have $1 billion invested in it, but the supply of it is 1 trillion of those coins. Then, that's the part that people need to kind of do their homework in. Yeah. It's kind of hard to just understand it by me just saying it one time. You have to go in and really understand how that correlation leads to the price movement between one and another, right? It's important. So just because you see a high price, it doesn't mean that it can't go much higher. Right.
Yeah, no, absolutely. I think that people that are listening, I know it's a lot of information. You can pause, go back, rewind, listen to it again over, a couple of times, go through it, take notes, because this is a lot of free information that you're getting about something that's potentially very good for your future. So just wanted to make a quick point there for people. So we covered kind of, what is money, kind of what is the crypto, where is it, kind of what it came from, why is it even relevant for anyone that's like thinking about it. We explained obviously like our current situation. We explained blockchain, kind of what is looking like potential, just hypothetical numbers, which seem to be a really high chance. Go ahead, Mike.
Well, go ahead and finish your recap so that it's nice and concise for the show notes, which you can scroll down for, by the way.
So I wanted to go into and I wanted to cover the investment piece of it. I think that this is a pretty good understanding. Unless Santi, you have anything else to add to kind of solidify, just the basics of crypto or Bitcoin, and we've been really hammering crypto. I kind of want to get into the who should be investing in this. And then we can kind of get into some of the different coins, and we can not have to. There's so many out there right now, but cover like the main ones that you know the most about, and that people can kind of understand. Even like the smaller coins, the high risk versus more of a safe investment strategy.
And then
Yeah.
just to put it out there, so I don't forget to mention it, there's like a billion different apps that you can use to trade crypto.
That'd be a good-
Maybe we could talk about that as well, because I've got like 3 or 4 on my phone, and I don't know which one's the best one.
Yeah.
So
So when it comes,
yeah.
So I'll answer that one first, since that's, I think, the most concise one. I mean, so just like the same thing, how there are a lot of platforms to trade in the stock market. So you have like Merrill Lynch, which is Bank of America, or TD Ameritrade. They use a platform called Thinkorswim. All of them provide the same service, which is access to the stock market, and you'll get access to all of the stocks, right? Facebook, Apple. And it doesn't really matter which one you choose. The only difference between them is that maybe one of them will charge you a little higher fee than the other one. And same thing with crypto, right? So you have Coinbase. That's the one I recommend to people the most, because it's so just user friendly. It's very easy to use.
It's what I have.
You download it.
Yeah.
You just download it, you connect your bank, and you're pretty much ready to go. You just click on whatever coin it is that you're looking at. It'll say it'll have a button to buy, a button to sell. And when you press buy, it'll say how much do you want. You could either choose a dollar amount or the actual amount of that crypto that you want to buy. And you just buy it. So it's that simple. Now, when it comes to the different apps, like I mentioned, a lot of it is the fee. So for Coinbase, I think, let's say for $1,000, I think they charge around $14 for a fee. But Coinbase also has its other app called Coinbase Pro, where it's a little bit more advanced. It'll show you more of like the trading features, like moving averages and stuff like that.
Mm-hmm.
And for every maybe $1,000 that you invest, they'll charge you like $3 fee instead of the $14. So It's not as user friendly, but it's still, anybody could learn it pretty easily as well. So if you don't, if you do care about those fee charges, then that's the only thing I would suggest. Just look around to see which one has the lower fees. But if you don't mind that fee, then I think Coinbase is pretty good. Gemini is also good. BlockFi, actually, BlockFi is one that I use not so much for buying the crypto, but they recently came out with a Bitcoin credit card. So I used to have like my Bank of America card that have like cash rewards. So they would give me cash back, right? Every time I would make a purchase, like whatever, 2%. And now with the Bitcoin rewards card from BlockFi, every time you make a purchase, you actually get Bitcoin back instead of cash. So since anytime I go to a grocery, whatever restaurant, I just use that card, and then I get Bitcoin back instead of cash. And over time, that Bitcoin appreciates as the price goes up with Bitcoin. So that's actually how I've told my brother about it and his girlfriend, and they got involved with it. I think they got into that Bitcoin credit card as well. So some people that might be afraid of investing in Bitcoin for whatever reason, they could apply to that card and they won't be investing. They'll just do their regular daily purchases and accumulate a little bit of Bitcoin like that through their everyday living.
Well,
that's pretty cool.
Yeah. And going back to what you said earlier about the dollar going down by 5% this year, any cash back you're getting is worth 5% less than it used to be. And Bitcoin's value is going up. So that's like cash back, but better. Yeah. I'm actually going to fucking sign up for that because I like it. That's nice.
I was also going to run this by you real quick just before we get into the coins. I know crypto.com is blowing up right now. They're even sponsored with the UFC. They're sponsoring the UFC, and like they're coming everywhere. The little lion, the little whatever they have on the symbol, but they have systems too that you kind of like play with the currency, and you can kind of like, I guess, use it on daily purchases as well, like a debit card. And I think you do get some type of pushback too with it, like some good reward features there. I don't know if you've dealt with it or like seen it.
No, so I haven't used theirs, but yeah, there's so a lot of crypto companies are coming out with that same type of feature, and I'm sure many more will. But BlockFi, from what I know, is one of the first ones that started that.
Mhm.
I know Coinbase is coming out, I think, with like a debit card
Yeah.
Yeah,
when
they
it
are.
comes to it. But yeah, I don't think they're just gonna, as of now, I haven't seen that it's like Bitcoin cash back thing.
Yeah.
But
I'm
yeah,
gonna
no,
look into that one as well. Holy cow.
yeah, yeah, man. No, there's a lot of opportunity, and so for people also that buy crypto, let's say BlockFi, and there's other platforms as well, but the one I use is BlockFi, so that's the only one I could really talk about. Um, if you transfer, let's say your crypto, let's say you buy it through Coinbase and you transfer it over to BlockFi, they pay you interest just for holding it there, right? So
Mm,
BlockFi acts sort of like a bank, right? In the like a crypto bank where they would loan your crypto out to other big players, other institutions. And because they loan your crypto out, then you make interest on that loan. So you could make anywhere from 4.5% to 5%, depending on what crypto it is that you have sitting there. And so I have some of my portfolio just sitting there, and every day, it'll tell you how much crypto you're getting accrued. And by the end of the month, they pay it out to you, and you could choose if you want to get paid out in the same crypto that you have sitting there, or you could choose another one. And that's another great way to make that passive income when it comes to
that's
crypto
crazy.
with those
Wow.
companies. Yeah.
That's amazing. Like my brain is just like doing like just like imagining that, and the fact that it's once you understand how to make time work for you, because this is the biggest thing. The very common way to make money is you just work more, trade more time for that currency, right? Dude, it's like it just you're kind of bypassing a lot of these features or a lot of other traditional ways that you would be investing normally. It takes a very long time, very small, like gradual increase, which is still working in your favor. But just seeing that like instantly you're getting this, over time, it's growing at such a rapid rate. As you said, what was it, 5 or 8% something?
Yeah, it depends which coin you're holding, but from 4.5%, you're talking about like the accrued interest on your coins?
Yeah. Mhm.
Yeah, from 4.5 to 5, some have 7%.
And just imagine seven. Let's just say seven, and that we're saying that right now inflation is at like on average you would say 2 to 3% a year is like what they would
Yeah.
want to keep it at. You just imagine if it was like right there. You're getting it at 5 or 7% interest. You're still like you're getting more versus losing those 2 to 3% with just having it in your savings. Just for people to wrap their mind around like the power of just that compound effect though that's going to happen in the next 10 years that you do this consistently. It's crazy.
Exactly. Exactly. And that's on top of the coin increasing in value as well, right? So
Yep.
that 7%, if it were just $100, the coin never changed from $100, you'd be getting 7%,
Mm-hmm.
$7 every year
Mm-hmm.
forever. But now that the coin goes up to 200, now that's 7%, now that you have $200 because that coin increased in value, now it's
Mm-hmm.
$14. Now it goes to 300, then it's $21. So it just keeps compounding on top of itself as the coin
Mm-hmm.
continues to go up. So, it's Einstein said something like that about like how the eighth wonder of the world is like compound interest, or like, and the people that understand it take advantage, and the people that don't like
Lose
lose.
out on it. Yeah.
Yeah, so it's important, man. Yeah, it's really big.
So, Santi, I want to dive into kind of like I know that you're a big fan. Just by talking with you personally, you've guided me to kind of just go into Bitcoin, secure, stable, first of its kind, basically. And then the other one that's very big is Ethereum, which is where I have most of my investments as of right now. Um, Kind of I wanted to touch on that if you had any other like coins that you would see, and then kind of I guess we can get into a little bit on like the safer routes that people can take. 'Cause I know people are going to be still hesitant. They may need to listen to a bit more times of just different conversations or listen to this over again. It's feeling comfortable with taking that step, because I know that was the biggest thing for me. Is like I don't know what's going to happen. I don't fully understand this. But seeing you go through it for years, obviously, I luckily have a connection with someone that I trust, and they can kind of you're guiding me and making sure that okay, dude, like this is kind of how it is. You broke it down for me, and I'm like, okay, I'm down. So if someone's kind of ready to do the same, what should they start kind of looking at?
Yeah, man. So I would tell them the same thing as you. And that's what I really tell anybody. So even at my job, when they ask me about it, I say, Bitcoin is, I would say, the safest bet. Even if there is a big crash, like I'm sure there will be again, Bitcoin will for sure be around no matter what. Like Bitcoin's not going anywhere. The only way that Bitcoin can get stopped at this point is if the entire global internet just gets shut down, which if that were to happen, we have bigger issues to
Problems
worry
to
about,
worry.
right?
Yeah.
Yeah, that we have to worry about our food, how we're going to get food. So that's the last of my worries when it comes to Bitcoin going away.
Take my food, but
China
not my
has
crypto.
exactly, man. So China has banned Bitcoin like over 15 times since its inception, and then they like take it. They say, okay, never mind. You could mine it again. So whatever. This year they decided to ban it again. The United States, like a couple of weeks ago, they asked like the SEC chairman if they had any plans to ban Bitcoin. They said no, we can't do that. We don't even have the power to do that. I guess like maybe the checks and balances thing, like the entire government would have to decide. I don't know,
Mm.
but they basically said that no, we're not going to ban it. So, long story short, Bitcoin is, in my opinion, one of the most safe bets that anybody can make, and I think it still has a lot of potential, a lot of growth from here. All these other coins that are coming out, there's over 5,000 cryptocurrencies, and a lot of them are scams. So people have to be careful. You have to do a lot of research on them, like what do they do, why are they coming out. But anybody could, at the end of the day, invest in whatever they want, right? But the other coin that I tell everybody to invest in is Ethereum, right? So Ethereum is this other cryptocurrency that was created in 2015, I believe, if not 2016. And what Ethereum does, it's basically smart money is what people like to call it. So thanks to this blockchain technology, right? This young kid, I think he was like 19, he created this coin called Ethereum. And he saw that this internet money, this digital currency, you could write little programs on it. So he created this token named Ethereum. And on the token itself, he made it so that you could write what are called smart contracts, which are basically what are called if statements. So let's take the example of a vending machine. A vending machine has an if statement written into it where it says, if you input $1 into me, then you'll get a snack, a chocolate bar out. So that's an if statement. So what Ethereum allows is for developers and people to create companies on top of the Ethereum blockchain. So that blockchain still has the same rules, the same thing as Bitcoin, where it keeps track of all the transactions. Every certain amount of time, those blocks gets pushed back and they all get connected. So it has that same exact principle. But now Ethereum allows for that extra smart contract capability, right? So now what companies can do with that is, right now we can't even think of it, right? But like a lot of companies are going to be able to, for example, artists, they're going to be able to write a smart contract that says like, if somebody listens to my song, then I'll get paid whatever amount, right? Mm-hmm. Or if washers that are connected to the Wi-Fi, they'll have like a measuring thing that says if the detergent runs low, order detergent from Amazon. And it'll just do that. It'll be all machine to machine communication. And Ethereum is going to allow for all that without any third party, without an intermediary to check that all these transactions are occurring. It's just going to be occurring nonstop throughout the internet. So people call it like internet money, where it's just going to be transactions happening all over the place as things occur. So as natural things that everyday things that we do. So like, let's say if you want to buy a home, you're no longer going to need a broker or somebody to check that you sent the money somewhere. The if statement is already going to be included in that token, where like, if Jonathan sends me $20,000 down payment for my home, then the title goes to him or whatever. And it'll just be verified on the blockchain using the Ethereum network. And you're not going to need that third party to check it. So that's why Ethereum is going to be a massive play in my opinion, right? That's like saying back in the day when the internet was created, right? You couldn't really invest in the internet, right? So when the internet came out, the dot-com bubble in 2000, all of these companies, internet companies, were shooting up like crazy, and you had to choose which one you wanted to invest in. And a lot of them went bankrupt when the crash in 2000 happened. A lot of those companies failed. And Ethereum right now is the platform on where all of these new companies are going to be built on top of, with these smart contracts, like these rules that the companies are going to write. But you don't have to invest in any particular company. So a lot of these 5,000 tokens or plus that are being created, they're being created on top of the Ethereum network. So using these smart contracts. So instead of you having to choose one of those random tokens that a lot of them could fail, and they probably will, 90%, 99% of them will probably go to zero. You could invest on the internet, which is Ethereum, right? On basically the analogy I like to give is like the racing track. Let's say you go to watch horses race. A lot of people bet on a specific horse to win the race. So with Ethereum is the racetrack. You could invest on the racetrack knowing that horses are going to be running on it and you'll make money because they're going to be using your racetrack, but you don't have to worry about which horse wins, right? So that's the best analogy I could think of when it comes to Ethereum and why it could potentially be so huge in the future, right? A lot of companies will be building on top of it, and you don't have to choose which one. It's just like the platform where everything's going to be built on.
Yeah. And I guess like a good way just to look at it for people is just like understanding like there's a lot of big companies that are going to be using this. So that's another way to kind of solidify your bet there if you're kind of on the fence versus something that has no one's kind of like putting anything into it, is not being like, supported by any company, any reputable, I guess, format. I don't even know how to put that, but like, yeah, just it seems to be something that right now I've already seen a tremendous growth, and like, the predictions on it right now, and even just the stuff on Forbes and stuff that I've been reading on it look very promising.
Yeah, man. So like, of course, people have made millions and a lot of money on these other little coins. But for example, like Dogecoin, now it's getting a lot more traction. But like in 2017, or I forget what year it was created, 2016, 2017, it was literally created as a joke. And like the creator said, this is just like a joke. It was made from that meme of that little Shiba Inu dog. And they literally said it in their white paper. The white paper is like a little thing that talks about what the coin is. But it took off. People just decided to invest in it, and that's it. So who's to say that people aren't going to just jump in on any other random coin and they're going to decide that it has value? Again, value is given by us because of beliefs, and that's it. So there's enough,
if everyone believes in Doge, we'll all use Doge.
Yeah. So, but like I said, again, everybody, and even Mark Cuban, he said Dogecoin could be used as transactions, and he, I think, accepts it in his arenas, like for basketball and stuff. But then that's when you have to understand how each coin works, right? So again, going back to Bitcoin, there's only 21 million. Dogecoin, there's like a trillion. And for Bitcoin, every 10 minutes is when only right now 12.25 Bitcoin or 6.25 Bitcoin are produced. For Dogecoin, every 1 minute, there's 1,000 Dogecoin that are produced. Oh, wow. So people, understanding that should already tell them, all right, if the price for the price to remain stable forever, there has to be every minute 1,000 coins being bought. That way the amount remains the same. If everybody stops buying and every minute 1,000 are being produced, the amount of it is getting inflated, which then makes the price go down. So, and all of these coins have these same things. You could go to coinmarketcap.com and it'll give you the list of all of the coins that are currently in existence. And when you click each one, if you scroll to the bottom, it tells you all of this information. It tells you how many of the coins exist, how often it gets produced, like all the information that you need. So that's why people need to do their homework. They can't just jump into the next like TikTok viral coin that you like see a video of.
Yeah, you have to be careful. And I think that's like a good way to just classify Bitcoin, Ethereum. There might be a couple others, They're more of your safe coins, more long-term investment. You want to look at it from like a big picture type mentality. And then if you want to hop on the joke with Doge, I think Shiba falls under that category, and a couple other small coins that have, like, you could make a killing overnight, and it can one day just wake up and you're like, holy crap, I just went up a couple decimals or whatever. And it's like, we're made some cash and cash it out. But that is not a long-term investment. People need to kind of separate the two, and they can't say, oh, crypto doesn't work, crypto's a scam, but you're playing these games with it, and treating it as such when you don't know. It's almost like when you try to say like investing is a scam and you did zero homework, went in by just like something you saw on TikTok, lost your money.
Yeah, exactly.
And then when it's been proven times and time again, I know now a few people that have good portfolios, and it's because they're playing the slow, steady game. How would you advise someone to, I guess, go about it, with like, I know there's different ways. There's people that kind of are big. They go big. Like, I have some people that are like, oh, I'm not going to invest in it until I can, buy a coin or something. I'm like, I don't go with that mentality, but I know some people kind of want to wait, and then they just put a bunch of money. Some people kind of do it more on a safe route where they allow themselves a budget of like, I'm going to put in this amount. Like, what are some ways that you would recommend someone that maybe new, that kind of wants to start kind of putting money in there?
Yeah, man. So that's a good thing that you brought up about people wanting to buy a whole coin, because a lot of people do see that large price of whatever coin, whether it's Ethereum or Bitcoin, and they think that they have to buy a whole one, right? So one thing that I didn't mention is that these coins are divisible by 8 decimal places, which means you can invest as little as $10, $1. You don't need to buy a whole coin, right? So yeah, what I recommend for people is, obviously you want to have some money invested, because like we talked about earlier, you don't just want to have it sitting in your bank, whether that's in the stock market or in crypto, which is, what the focus is here. You do want to invest something. So I can't tell people how much or how little. Obviously, none of this is financial advice. Again, all of this is very subjective to go up and down. The volatility is large, and everybody has to be aware of the risk. But investing an amount that you feel comfortable with, that you're not going to need in the next week, 2 weeks, a month, right? That's what I recommend, right? So if you have, if you're a rich person and you have $10,000 just sitting that you're not going to use ever, then go ahead and invest that. If you just have $50 that you don't think you're going to need, then go ahead and invest the $50. And as you see that price, maybe you put $50 in, you're going to see that if it goes up to $60, you're going to get intrigued, and you're going to be like, why is it going up? So you'll start doing more research. And that's the best thing that I recommend for people. Just put $10 in. And once you see that money start going up, you're going to start being more curious, right? When you don't really have skin in the game, you're kind of just like blowing it off. You're like, oh, it's whatever. I'm hearing a lot about it. But the moment you actually put money into it and you see the fluctuations in price, you start to get more involved in it and actually want to learn more about it. And that's when you get into like the rabbit hole and trying to figure out why this is even a thing, right?
Yep. I think there's a way that there's a term, and I don't want to butcher it. It's a cost average. When you invest like the same amount, doesn't matter. It's a consistent flow of money. It changes with the time, but at the end of the day, you have like an average cost of what you've been, I guess, paying for it. What's the term for it?
Dollar cost average.
That's dollar cost average, exactly.
Yeah.
So that's something that I also tell people to do. So, a lot of people do that. Let's say every week, no matter what the price is of a stock or of crypto, whatever they want to invest in, they put, let's say, $50 every single week. So if today you bought something when it was worth $100, and next week you put that same amount of money. So let's say today you bought one stock at $100. The next week you buy it again. You put $100 in again you put $100 in again for that same stock, but the stock is now worth $200. Your dollar cost average, right, would be $150, right? Because it's the average between the two prices that you bought in. And every time that you continue to invest that money every week, it just continues to average into whatever price, whether the price goes up or the price goes down. You just continue adding, and the price of the actual stock that you have invested in or crypto is just being averaged in depending on what price you're getting into it. So that's a good way to invest as well. So there's those two ways, right? There's a big bulk investing where you just throw in a whole bunch at one particular price point, or the dollar cost average where just over time you just continue to invest, right? So if you have $5,000, you can either decide to invest it all at one big go, or divide those 5,000 into 5 different weeks or 5 months, and every week or every month invest 1,000, right? No matter the price.
Yeah.
Now,
I think what I wanted to say was, I think that for a lot of people, doing it that way makes it seem more possible. I know personally in my situation that I can be that person that if I see an opportunity, I will, like, jump in. But for the most part, what I do with a lot of things is that you have a plan, you kind of go based on what's comfortable. Like you said, money that you're not going to worry about, next week or next month. Like if you can only spare $20 or $50, even as insignificant, I know that's what turns off a lot of people, because they have that all in mentality, but it's really just keeping them stuck from doing anything. And that's why I want to call them out on that. But it's like, just start doing little by little, because over time, like we said, if you're looking at it from a long term, you're not going to notice those initial $20. Eventually you're going to be in a financial situation, hopefully, that you can invest $100 a week, $200 a week, whatever. And you are obviously financially healthy. We're not saying this, like we said, this is not financial advice, but this is just stuff of opinions and stuff that we've seen. Obviously Santi has the most knowledge in this particular topic. That's why I wanted to have him on. But from a personal guy that's new, go little, just start with a little bit, watch what happens. It's a very cool phenomenon when you start seeing money start to change without you having to have to put in more time or effort into it, which is really, really nice. It's a good feeling. And I encourage just continue education with it.
Exactly, man. And yeah, so what you just mentioned about it being too little, that's one thing that people also tell me, right? They're like, no, but if I just put $20, nothing's going to happen.
Mm-hmm.
They've been saying that ever since the price was, let's say, at $100, right? So
Mm-hmm.
I've had people that have told me back when the price was at 10,000, like, oh no, if I just put $100, like, what's gonna happen? Like, it's nothing.
Yeah.
And now that it's at 60,000, they're like, oh, I wish I would have put $100 at 10,000. So that's human psychology, right? Right now, people will be saying the same thing. Oh, if I only put $100, like, it's too little. What if it goes incredibly high from here? Then they're going to be saying, I wish I put when it was at 60,000. So, you're never going to know. You just have to take that risk, right? And what I always tell people too, like, this is still very early. This is literally a technology that came out in 2009 that was created. So we're 12 years in, and it's still extremely early. Anybody who even has thought about this of getting in, it's still, a good time to get in. And you either play it safe, where, let's say, a company like Amazon or Apple right now, like, sure, you could invest in that company because it's already proven itself and they're good companies. Or you could take a little bit of a risk, but with higher risk comes more reward, right? People that invested in Amazon back in 2000 when it was, nothing, and they were just, I think they weren't even selling books yet, but eventually they started selling books. Who was going to think that Amazon was going to rule the world, right? So the people that took that initial risk because they saw the vision of the company or whatever, then those are the ones that reap the biggest benefits. So again, if for the people that are young, you are a little bit more susceptible to, like you can take a little bit more risk as opposed to, if you have kids, family, or you're about to retire, then that comes with a lot more responsibility that you have to look out for. So,
absolutely, I think that's a good way to kind of conclude. Because Santi, eventually we're going to have you back. We want to get more in depth on other topics, and we can kind of really hammer it. But I just wanted this episode to be where someone can kind of grasp why this should even be part of conversation. And I think that it's realistic. It's not even like an opinion, it's a fact. It's more risky not to invest than it is to invest, in the long term.
100%.
Because at the end of the day, we can't control certain things. Obviously, we don't know what's going to happen long term, but when you see an overall pattern and trend going, and it's even if it doesn't even go at its full potential, but it still increases. Overall, you're gonna be happy that you did, because there's always going to be some of that gain, even if you did small increments for the long time. I mean, you're playing the long game. Do what you're comfortable with. I want to I don't know if there's any closing thoughts that you have for our listeners and anyone that's checking this episode out.
And yeah, so you pretty much said that the best. So people that want to get involved and don't really understand it, like we mentioned, go in little by little. As soon as you start seeing that money go up and down, especially if it starts going up, you're going to start to feel like, all right, like maybe I should invest in more. Let me research more. Let me see what this is. And that'll make you feel more secure. Or you're going to start seeing, want to look into more articles, more videos. You're going to learn a lot more about it. And that way too, when it does come down, because in most likelihood it will, you're not scared and you're not telling yourself, what did I get into? I have no idea what this is. So no matter what, just at the end of the day, the more knowledge you gain from this or for any other type of investment, the more better off you'll be.
And I think another big thing I want to remind people, obviously I trust you wholeheartedly when you're giving me this information. I know you've done your research. People that are listening, if you talk to people that know a lot about what you're trying to do. And this is anything, this is just like obviously a life thing, but when it comes to your finances, look up the people that are not coming at it with a I'm going to make you super rich type mentality versus let me educate you. Let me show you what this is. And then this is not a prescription. You have to put in $1,000 every month. That's the only way. Like, look at it like this is the information. Take this information and apply it to your current situation to make the best decisions moving forward. Because if you're listening to negative people that don't know what they're talking about, they just regurgitate whatever they heard from, their favorite TikToker or whatever, you're going to be in trouble and you're going to have a bad taste with stuff like this. But like I said, I slept on it for almost 5 years now, but it is what it is. Not making excuses. I'm in it, and I just knew I had to start somewhere. So I'm kind of glad I have, you to chat with on a daily basis if need be. But I would encourage the listeners to do the same and seek out credible people that that they're in it, that they're actually walking the talk. They're going to be able to give you the best advice.
Exactly. Yeah. And always, and just to add a little bit more on top of that too, if you ever find an investment or something that you believe in, it's still good to also listen to the opposite side, right? So everybody that hears me talk about like how good Bitcoin is, good Ethereum, whatever, there's a lot of people that are going to think the opposite, and it's good to listen to that opposite side, right? That way you get both sides of that spectrum and you make a decision on your own. You decide what you believe is the best choice for you. And the reason why I'm saying this too is because, like I said, there are a lot of scams out with these crypto, right? With any big technology, especially out in the internet, a lot of scams are going to be found, right? In 2017, there was a huge one called BitConnect. And that one was basically a huge pyramid scheme. And it was incredibly big. That one had like a massive army behind it. People were getting super, super rich. These YouTube influencers were getting all their followers to get in. And that coin eventually went to zero, right? So all the people that got involved, they were super hyped. Like they believed in it so much, but they didn't understand it. They thought that, oh no, if I get this person in, I'll get more of it. So it just became this huge pyramid scheme. And the point is that there were a lot of warning signs, but just because it kept going up in price, everybody was neglecting those warning signs. So again, don't let your emotions and your greed and fear, whatever it could be, to cloud the logic that could be presented to you, right? So it's important to always listen to both sides and just keep an open mind when it comes to any of these investments.
Absolutely. At the end of the day, big red flag. If it's a pyramid scheme with anything, run. the opposite direction, whatever it is. I don't care if it's fucking supplements, crypto, whatever. I got someone actually did approach me. I'm on that. I was like, once they said once they described the pyramid scheme, I was like, nope. It's like, yeah, you can turn this money into this much money. It's like, sounds great applying to that emotional side, but objectively speaking, this is not what you're in the game for, guys. You're trying to be long-term investors and just, secure kind of your future. But anything else? Mike, you have anything?
No.
Man, a few words. I love it. Santi, I genuinely appreciate you coming on. This was a lot of fun. We're gonna have to do this again. We can chat and we can see maybe something we can research a particular coin, and we can really go in on some different topics and stuff that I'm going to be bugging you about, of course. But where can people find you? What are you doing? What are you up to? I know you've been kind of wanting to get into this type of stuff and help people. But I guess right now, what do you got going on with you?
Yeah, man. So I've actually been wanting to start teaching a lot more people about this, because like I said, once you start learning about how our current financial system works and how it is hurting a lot of people. And I'm not saying that the government or the financial system is evil and that they're doing this on purpose for people, but things that they have to do to keep the economy going one way or another does lead to bad causes. So it's important for people to understand. And I've been wanting to teach this to a lot of people. So I'm going to start providing more education on my Instagram. So anybody that would want to follow me, that way they could join any Instagram live that I were to do, they could go ahead and join or follow me. I go by San_man22, and they'll be able to follow me that way. Any type of educational content that I put there for free.
Can you plug that in one more time? I think it cut out a little bit on my end, so I want to make sure that everyone heard it.
Got you. Yeah. So it's San_man22. All right. So yeah, that way, any type of time that I hop on Instagram live, just to do that education for people, because I do get a lot of questions regarding crypto, and I think it's important for everybody to learn about it. You'll be able to hop in with me.
Absolutely, that's amazing. So definitely go give them a follow, guys. Go and support. Unbiased information. The best intentions is just to kind of better you with your health, fitness, and your life. So we'll kind of wrap this up. Like I said, follow him, like this video on YouTube if you're actually watching this, subscribe to the channel if you haven't already. If you want to go and check us out on social media, we're on Instagram at The Next Level Show. You can find my account at John Alva Fitness. Gabe, he's at Prime and Glory. And Mr. Mike is at Mike Nillis PT. Santi, thank you, brother. Till the next one.
Thank you, man. Thanks for having me.